Forex Trading Education Pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. The title of this video is Forex Trading Education Pro. Let's get started. In this tutorial, I want to talk about market stable data based on distortion, escape, and normalization. Distortion, escape, and normalization. All right. I recommend to traders to watch the full length for this video so they may understand what we meant by Forex Trading Education Pro. In order to achieve a consistent winning trade in the Forex market, one must work with market stable data. One is likely to lose or continue to lose if one is constantly violating the market stable data, or if one does not know the market stable data. All right. The first market stable data that one cannot afford to violate is the market patterns. So we have a three market pattern. The rising channel, but this rising channel is a normal rising channel. It's a diagonal rising channel. This is the first market pattern. Then we have also the horizontal channel. All right. And we have the declining channel. In this case, we are talking about a diagonal, a declining channel. So if the price is going up, or is consolidating, or is going down, in a normal market, in a healthy market, we are likely to see either a diagonal rising channel, or horizontal channel, or a diagonal declining channel. This is the first market stable data that we cannot afford to violate. The opposite is also true, is that if we see, for instance, any other channel that is completely different from this channel, the number one distortion is the vertical channel. So when we see a price in a vertical channel as we see here, we will say that there is a distortion. So as a market participant, you don't want to buy at a distorted price, and you don't want to sell at a distorted price. So one example is that traders very often are trading on their mobile phone, and sometimes they have a distorted data or a distorted charts. So they look at the chart, they see something that looks like a bullish chart pattern or a bullish signal, but because of what they are looking at is completely wrong, or the data that they are receiving is wrong. That's why a professional trader will have at least two sources of data. All right, so they don't look at their broker's data alone. They have another data they are looking at. So if they see that there is a discrepancy between the data feeds, they will quickly notice that something is fishy here, and they will stop trading because they don't want to buy at a distorted price, and they don't want to sell at a distorted price. For a professional trader, it's very important to trade in a normal market, in a healthy market. And also, a professional trader should be able to recognize when a financial instrument is distorted. Very, very powerful. From 2012, the Federal Reserve has stopped printing the dollar. But before that, from 2008 to 2012, they were devaluing the US dollar, what we call quantitative easing, what we call printing the dollar, all right? It's a distortion, all right? It's a big distortion in the global financial market. So, in fact, if you have been investing or trading from 2008 up to 2012, even up to today, because in fact, since 2009 up to today, the global financial market is distorted. So if you didn't know, well, it's bad enough because professionals knew that the market is distorted since 2009. In fact, up to today, it's distorted. All right. In a distorted market, there's a high chance that trader will, investor may lose more than they may gain. They are buying at distorted price and they don't even know, and they are selling at distorted price and they don't even know. So they end up making a lot of problem, because a lot of mistakes, because the market is not healthy, it's not normal, it's distorted. But it does not mean that we cannot trade a distorted market. Talking about the Forex market, the number one thing we want to know, is it distorted? Okay, if it's distorted, we know. If we know how to trade a distorted market. So we will manage the risk carefully, okay, and position ourselves carefully and adopt a specific strategy that is, effective during a distorted market. So if you are hedge fund manager or whatever you are, and you are in the market, and you know that the market is distorted, you will put out your arsenal, the specific arsenal, to fight during the distorted market. So you may say to me, Joe, get to the point straight away, all right? The point I want to make to you here, look at this hourly chart of the USD yen. What do we see here? The price was in a vertical channel, okay? This is a distortion to a certain degree. Sometimes the price may go in a vertical channel, but it's not 100% distortion. It's just because of order that has been placed there. But generally speaking, when we see the price in a vertical channel, it's a distortion to a certain degree. So we'll note it now, and we want to apply strategies that are effective in this condition. What we are talking about here, Forex Trading Education Pro, after a distortion, we have what we call the escape. Now, the escape is what? So you see here, it went down in a vertical channel. The escape will be a rising channel, right? Will come out of the vertical channel. That's the escape. So there was, you see here, it was in a vertical channel. The next step is the escape. The market escaped the distortion. That's the second step. The third step is the normalization. So distortion, escape, normalization. Look at the channel. You remember the three channels that I showed you first? The diagonal rising channel, the horizontal channel, and the diagonal declining channel. We know now that a vertical channel is a distortion. And if there is a distortion, there will be very often an escape. And the escape is usually followed by what? A normalization. Sometime, my friend, you may see. I want you to get this, because that's why we call it Forex Trading Education Pro. So you may also start thinking like professional trading. Sometime, my friend. All right, I will show you here. You may see a distortion. All right, price went down, for instance, okay, in a vertical channel, which is a distortion to a certain degree. All right, and we may see the escape. Price out of the channel, the vertical channel. But instead of going straight away to a normalization, we may see another distortion. All right? So when we see another distortion, what we will expect is another escape of the second distortion. In normal condition, we should go to normalization, which means the price going back in a declining channel like this. But the point I want to make to you, do not assume that after the escape, we can go straight away to normalization. After the escape, we may see another distortion. That's the point I want to make to you here. I don't want this video to be too long. So here we have a distortion, and then we have the escape. You see, because the price went down, now we see the escape. All right? Now we see a normal progression. All right? A normal progression. Right here. Distortion, escape, normalization. Now look here. After the normalization, we have again a distortion. Are you following me? Now it's again in a vertical channel. Am I lying to myself? Okay, look at it. Is it vertical? Is it diagonal? This move from here to here. You will agree that it's a vertical. So we will expect again escape. Because it went down, we are likely to see a rising channel like this in normal condition. Now, after the escape, we will expect what? A normalization. But look, we have again a distortion. All right? After the distortion, we will expect what? the escape. Here it is, escape. And we will expect after the escape what? A normalization. But here it is, we have again a distortion. Now, what I've just said to you is so powerful, and you can apply it on any time frame to make excellent trading decisions. So how can we take advantage of it? So we see the distortion, and we see the escape. If the price is out of the escape channel, which is this one, what do? We can sell, because it went down first. Now we see here, if it come out here, we will sell. If it come on the other side, we will buy. Because in the price, there is a distortion, there is escape, we will expect a normalization or another distortion. So here it is, here we see a distortion, the escape, all right? So here, after the price out of this, the escape channel, we will sell, because it came out here. Anytime the price out of the escape channel, we will buy or sell in the direction of the price. So here, distortion, escape, now it's going down. We will sell. We will give priority to sell signal if the price is going down after the escape progression. But what we are looking for, there must be a first condition, distortion, escape, and we follow the price. You remember what I said? We don't want to find the market. All we are trying to do is to flow with the market. Distortion, escape. Now we are waiting to show us the way. Now it's going down. We will sell. Give priority to sell signal using a top-down trading method. So we can see this very often on the hourly chart, especially on the hourly chart. You may see on a higher time frame, distortion, escape, normal progression, or distortion, escape, distortion again, escape. So you can know what the price is likely to do. After a distortion, we are likely to see, okay, escape. So here we see that the price went down. If it did go up, so we have a vertical channel in which the price was going up, okay? So here we are, a channel like this, which is a vertical channel. So we say, okay, George said that this is a distortion to a certain degree. We know that, okay? It's a distortion to a certain degree. So price went up like this. What are we expecting? Because it went up, we were talking about a bearish progression here. Here we have a bullish progression. What is likely to take place? We are likely to see escape. The price will go in the opposite direction, will go down. That's the escape. It will go down. Come out of the vertical channel, that's the escape. It must come out of the vertical channel, that's what we call escape. So because it went up, it's likely to come out going down like this before we see what? Okay, a normal progression or another distortion again. So the critical thing that you must not forget, we must follow the price after the escape. So here it is, distortion, escape. If it's going down, we just follow it. If it's going down after the escape, must go down. After the escape, this channel, if it's going down, we just follow it. Distortion, escape, normalization. Distortion, escape, and normalization. This is about Forex Trading Education Pro, focusing, okay, on the price itself and how the market behave, the market behavior. A vertical channel, my friend, is a distortion to a certain degree. After a distortion, there is a high chance that we may see a correction. Or after a distortion, there is a chance that we may return to normalization. It's similar to what we say, deviation and return to the mean. So financial instrument go up too far, is overbought, it will return to its true value, its equilibrium price level. This is what we call the process of returning to normalization. But now we have another market stable data that when we have a distortion, there is likely that we may see first an escape. If it goes down, the escape will be a rising channel, and after the escape, there will be a kind of normalization or another distortion. After the escape, we just follow the price. Does it make sense? If there is something that you do not understand, please feel free to ask me a specific question, not too long question. Go to the point, ask me a specific question in the comment section, and in due course, I will record another video to answer your specific question. Here it is. Price went down in a vertical channel. Okay, what's coming to our mind? A distortion. What is likely to take place next? The escape. Here it is. Okay? So while we have to understand that very often you don't see a distortion followed by a distortion. Usually we see a distortion followed by an escape. This is consistent. Distortion, escape. After the escape, we can have another distortion or return to normalization. Here we see it come out here. We just follow the price after the distortion. Is it going down? Is it going up? We follow it. Use a top-down trading method to control the risk. Here it is, normalization. Now it's coming down again. Now you see it went down fast. Just flowing with the price. Flow with the price. Follow it. And don't violate the market pattern. Here it is, vertical channel again. After the vertical channel, don't just rush. Be patient. It's coming out, you see. You see here, it came out, pull back, you see. Came out, pull back, and then it's going up. Draw the channel and wait for it to come out of the escape channel. No rush. As always, if you learn something for the first time, test it, retest it, okay, until you master it. Use a demo account, okay, and work on your ability to trade. Once you get it right, you are likely to make excellent decisions. So for the dollar yen, here we are. What do we have now? We have a vertical channel. What is this? A distortion. What is likely to take place here? We are likely to see escape. Okay, is that all? Is this all the escape? Well, let me know how you trade this, okay, next week, all right? We wish you the very best in your trading, okay? I want to clarify a few things. When we have a distortion is a kind of, okay, you will see a lot of speculation during that time, violation of market basic principle, and also we see a lot of manipulation. So distortion, okay, distortion is highlighting speculation activity in the market, violation of basic market principle, market manipulation in some cases, all right? But also, when we have high impact economy news can create a distortion. A surprise can create a distortion. A high impact economy news, high impact earning news, high impact economy news can create a distortion. We are likely to see a lot of speculation, violation of basic market principle, and manipulation. Then we have the escape. Okay, the escape is the change of market sentiment, so the attempt to return to normalization. And then we have a normal market. So you may say to me, Joe, why are you recording this video today? Because on the 16th of December 2015, the Federal Reserve, after more than 6 years, has put up interest rates. So interest rate was very, very low in the United States, and also in many parts of the world was very, very low, especially in the United States. But for the first time after 6 years, the Federal Reserve has put up interest rate. This is the first step towards what? Normalization. So because remember what I said to you at the beginning of this video, that the market was distorted since when? 2009 up to 16th of December 2015. So now the Federal Reserve has taken the first step to the normalization. We will see the escape before we see a normal market. So we are now in the escape stage when the market is slowly but gradually escape. It's coming out of the distortion, and it's likely, talking about the fundamentals analysis, we are out of the distorted fundamental market, and we are now going back to the escape and then to a normal markets. The Federal Reserve has fired the first signal of the normal market. I'm very, very excited because the market is returning to a normal progression. We will see how long this will take, the escape before a normal market. Or are we going to have a distortion, escape, and another distortion? We will see. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. We want to know whether you like it or dislike it, okay? If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. In order to achieve consistent winning trade in the forex market, one must base trading signal, trading strategy, trading techniques, trading tactics on market stable data. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Forex Trading Education Pro. Speak to you soon.